Hi, this is Troy Emory once again. Welcome to Ownership and Power. This week's topic is going to be how to really resolve your own tax problems, which is a continuation of last week. Again, just in case you missed last week's show, I'm Troy Emory. I'm a CPA here in Greenbelt, Maryland. And we do services for predominantly the Washington, D.C. area, and we have quite a few clients really across the nation. But there's a couple of issues that are really hold near and dear to my heart, and it's really centered around our taxpayers who might owe and don't really know how to really resolve their tax issues. And last week, we touched on a few points. There are a lot of reasons why people either don't file or really don't pay, and then once they get behind and have a debt, they go into this hiding mode where they're scared to pick up the phone if the phone rings. If they get the little white and black letters from the IRS, they kind of are overtaken by fear. But we see these type of clients all the time, and my heart goes out to them because they can resolve these issues. And there are a lot of reasons why people get into tax debt. And this is one thing that at some point I plan on writing my own book on this because so many Americans are behind on their taxes, or they just don't know how to really go about tax planning. As you will see later, you got two types of people who really come into my office, and this is the wage earner that actually gets behind on taxes, and then you got someone who really has a good idea or a few good ideas, and they want to start their own business, and they begin these businesses, and next thing you know, debts start to really amount. And taxes is one of those debts. But unfortunately, the tax enforcement, they have more enforcement than just a regular bill collector. They can quickly file a lien. They can start levying bank accounts. They can call you and harass you. But it seems like the tax authorities have more bite when it comes to not paying your debts. Like, for example, here in the state of Maryland, if you are behind on taxes, they will not let you renew a driver's license, a professional license. They have those type of enforcement teeth. To be honest with you, I don't agree with the approach of not really letting someone actually get a driver's license, because if you don't have a driver's license, then how are you going to get to work to even pay off your taxes? But these things like I said before, these clients come into my office, and I really wanted to address some of these things. The first thing we're going to do is we're going to look at some of the reasons why people do not actually file tax returns or pay in that matter. One of the biggest one that I always come across is fear of not being able to take care of the daily expenses or the monthly expenses. That's probably the biggest reason that we've seen why people don't file or pay their taxes. They feel that it is legitimate. You got so many things that compete for your money that taxes is the last thing that you really want to take care of. It could be that you got children in school, private school, and those bills start to mount up. You got other debts, credit cards, and you may not even make enough money. And then with all these things kind of competing with your disposable income, it's kind of hard to really factor taxes in there, especially when you don't have this person from the tax authority just constantly over your shoulders. And our system is more like it's a voluntary tax system. No one really forces you to actually do a tax return. You really voluntarily actually file that tax return. When it comes to paying, you actually voluntarily pay. believe it or not. Even if you're a W-2 wage earner, you're volunteering your commitment to actually pay taxes, in that you set your own withholdings, you tell them what state you want to withhold in, and really you can control how much actually gets taken out of your check, for the most part. Um, so again, the biggest fear that we see is the fear of not being able to pay your current expenses. And I'm going to actually get into some examples. For example, I'm going to talk about a wage earner, a typical wage earner. And I'm going to say this person makes a $98,000. And forgive me if you can't see the slide that, there's a presentation where I start off from the top, where someone says, okay, I'm making $98,000 here. That's pretty good. That's a pretty good sum of money. Um, if you are a family of four living in the Washington D.C. area, that is kind of like a struggle. And there's some places in the country, like New York and so forth, where that's going to be kind of hard to live off of $98,000. But I'm just going to start out with an amount that you know quite a few people reach the $98,000, $100,000 mark in their life. There are some people that make less, some people make more. But I didn't want to really put a number in there to really intimidate you and say, hey, look, if you're not making $98,000, you can't pay your taxes or any other debts. This could be a conversation for someone who's making $40,000 or $50,000. But I just picked the number, to be honest with you, right out of the clear blue. I picked the number right in the middle. I said, okay, a typical wage earner, college educated, or may not be college educated. $98,000 is not a far stretch. So if you see on the screen there, I think it's up now. This person makes it's a monthly income of $8,166. I just divided by 12 and got that at $8,166. This person has two dependents. They try to contribute $400 every pay period into their retirement plan. It's not. I wouldn't think that this is uncommon. This particular profile. Of course, the person wants to put some money away from retirement. They want to have money to really support the children. Children have all kinds of activities. I have a few children myself. There's always the soccer. There's always the fees at school. But this particular profile, I wanted to set something up that people can really identify here. Again, this is a single parent, or you could probably look at this and if it was two people who make in around $50,000, you still around that $98,000. So the first item here is taxes, federal taxes. As you see here, the person who fits this particular profile, they should be paying about $1,500 of taxes, federal taxes, every month, and about $510 per month in state taxes. So that's a quarter. That's a quarter of the gross income right there. And of course, you and I know Uncle Sam basically gets that off the top through withholding. And then I kind of thought about the typical family, and I tried to put in the expenses here that from my experience, what things cost. Some of these things might be higher, some of the things might be lower, but I was just trying to ballpark it here. So it's funny. The next largest expense item in my house is definitely, after the mortgage, is definitely food. To be honest with you, especially when you have children. And when I say food here, I'm including food that you might eat, in your house or eating out. But I estimated, for a family of 3 or 4, it's going to be at least, believe it or not, about $900 a month when you just add everything up. It doesn't seem like it, but if you look at your receipts and you start adding things up, I guarantee you're around that $900,000 a month. That's higher than your car note. That's higher than most of your expenses. It's really shocking to see how the price of food has gone up. But hey, you got to eat. Um, so the next thing, the highest thing, is, of course, obviously, it's going to be your mortgage or your rent. $2,600 in our area, the DC area, is pretty in the middle there when it comes to rent or mortgage. So like when I was putting this thing together, I said these are the typical expenses. So if you look at taxes, you look at all the other expenses, you see that you're basically breaking even, or in most cases you're kind of in the hole there. So what happens is, you start to cut corners, and you try to see what you can actually not pay, and typically people start changing the allowances to kind of make up for that shortfall. There's a $441 shortfall there. So people kind of, they change the withholdings and pay less taxes, and they try to make up the shortfall there. Probably a better thing to do is probably try to cut back on some of the other expenses. Now I just want to say to you, I'm a CPA, and this is going to sound kind of strange coming from me, but I'm not one that says that, hey, look, you can't go out there and buy a new car. No, I don't believe in that. If you want the car, if it's in the budget, go in and buy the car. I don't care about the car depreciating. We all know that when you drive the car off the lot, it's going to depreciate. But we can't live our lives making purchase decisions based on the rate of depreciation. I mean, are we saying that we can't buy? We got to always go buy used pants. We got to buy used shirts. We got to buy used whatever, socks, shoes. No, we don't take that approach in life. I don't have a problem with buying a new car. As a matter of fact, some of the car manufacturers, they give you a bigger incentive if you buy new. I think this is an old way of thinking that, don't buy a car because it depreciates. The bottom line is, if you want the car, and if it's in the budget, go on and buy the car. But it's just the type of car that you want to buy. That's the key thing. You might want to look at, do I really need to buy the Mercedes Benz? Do I need to buy the BMW? Maybe one of the Japanese cars. Last I checked, they work just as fine as any other car. And in most cases, they last longer than the other cars do, an American car. So I'm not one to say that, hey, look, you got to live your life meagerly where you can't enjoy yourself. No, I don't agree with that. I think the best case that you can do is just make more money. It sounds kind of strange coming from a CPA, and I do understand that, the more money you make, the more taxes that you make. But the bottom line is to live comfortable. You got to increase the top line. You got to make more money. You got to do whatever it takes to make more money. There are some things that you can do to actually help you as far as your day-to-day expenses and being able to not get into tax debt. I'm a firm believer that, especially in high probably priced areas, high inflation areas, two wage earners are better than one. I'm not saying that you go out there and you get married just because you need financial support. No, that's not what I'm saying. But if you are a couple, and you can manage your expenses well, then you probably will fare better off if you can, not get into, fighting over small things, and basically just understand that, hey, look, I'm trying to build something here, and both of you understand and are really supporting one another. But I'm going to say that, hey, you got to know your mate. That's the number one thing. Whoever your mate is, you can't have one that, is good with money, and the other one is terrible with money, because you're going to be as strong as your weakest link. I hate to put it that way, but it's absolutely true. Or you might be the type person that thinks that you can support the whole family, whether you're male, female, you can support the whole family, and But the thing is, you're not really planning for rainy days. I mean, I'm a firm believer that, you choose the right mate. You both get on the same financial goals. I'm not saying that both of you have to go out there and work and, work 12-hour days. That's not what I'm saying. But at least understand where you want to go financially. Have the same goals. Discuss your goals financially. Discuss how you're going to handle your budget. Discuss where you're going to spend your money. I think you got to have these open discussions with one another. But and the last point is, I already talked about it. You're basically going to have to just make more money. That's the key here. If you find yourself struggling to actually make those tax withholdings, I would not start playing with allowances and so forth. The bottom line is you have to do things to make yourself more marketable in the workforce. Maybe self study, the studying what the person next to you does, studying what everybody else does at your job. Put yourself out there on the market. See if you can make more money. Again, in order to really survive in today's business world, you're just going to have to just prepare yourself to just make more money. So, as you saw the wage earner, I run to clients all the time. The more money they make, the more money they want to spend on a nice house, a nice car. However, the taxes kind of get thrown in by the wayside, and you look at that as a secondary or third option when it comes to actually paying bills. But it's in the long run, it's not the right thing. That's the key thing, because you just don't want to live your life, hiding from the IRS or tax authority. It's just not a good thing. Now, the second type of person I'm going to mention is people that you might be working a job for a long time, and you always want to go out there and venture on your own and start your own business. But there's a lot of planning that should go on when it comes to starting your own business. It's a great idea in theory, but starting your own business, to be honest with you, it's not for everybody. I mean, me being a CPA, I used to say that, hey, look, go on and start your own business and do for yourself, but it's just not a message for everybody. It takes commitment. It takes knowing what being a subject matter expert in your field. It takes standing up when going to work every day when things don't look good. It takes discipline when things are good. You have to be disciplined about your money. You have to understand that, hey, look, I have to hire employees. When I hire employees, I'm going to have payroll taxes. But there's a lot into just starting your own business, and it's not for everyone. I mean, I don't know how much I can really emphasize this. It's just not for everyone. And the learning curve, it is a tremendous, tremendous learning curve. You think you might be prepared, but when you get out there and you have to eat what you kill, it is not for everyone. So what I'm going to do is I'm going to put a scenario up that really describes the person who goes out and they have a great idea, and all ideas are good ideas, but whether you want to implement those ideas or whether you're ready to implement those ideas is a whole different story. So I'm going to put a scenario up where you have a person here who wants to start a business, and they don't have sufficient capital to really start the business. And some businesses, you don't need a tremendous amount of capital. But in other businesses, you may need a lot of capital. It may even be you just need lines of credit. But one thing is for sure, when you actually are running a business, which I run a business day to day, there are always unexpected expenses. You just cannot get around that. Whether it's something in your house, whether it's something at the office, whether it's advertising that you wanna get involved in, it's a new office space, new cars, and whatever. There's always unexpected expenses. So I'm gonna go right into this scenario here. Now, this first scenario is a person who just starting off. As you see here, the total sales are about 20 grand. And in this particular profile, this is a person that probably opened up a store. Um, the sales were basically about 20,000. The cost of sales were about $4,000. That is. So the cost of sales are pretty low. So the next thing you have your gross margins or your gross profit. What that means is this is the profit after my direct costs are incurred. So, for example, if you say you open up a clothing store, your sales would be obviously what you sell, and then the cost of sales is your, if you sold shirts, shoes, coats, and whatever clothing there is, you sold those items. The cost of what you actually sold those items is your cost of goods sold. It's not your inventory. It's whatever the cost associated with selling that particular item. So after you subtract out your cost of goods sold, you have what's called gross margin here. And in this scenario, the gross margin is pretty good, actually. 81% is pretty good gross margin. Gross margin is usually around 40 to 50% of your gross sales. So, I'm not doing this discussion really to explain what an income statement is. I'm really trying to keep it in the context of tax. So, I'm going to look at some things that kind of trigger tax liabilities. So, in this scenario, the payroll is about 50% of the actual gross. Okay, so you got to have people who work for you. So you can't be out there, just not paying people. So you're gonna have to have some type of payroll here. Before I get to the payroll taxes, one tax that taxpayers, especially new taxpayers, kind of forget is the sales tax. So, in Maryland here is 6% sales tax. But that sales tax, you want to collect the money and then you want to have a price for your items and then you tack on the sales tax. You'd be surprised. I see a lot of startups who forget about this point. They don't necessarily collect for the sales taxes. So that's one item that you're going to have to pay. That comes out of the customer's pocket, right? But the problem is, you see at times you get kind of tight on cash and you start spending that money in your ordinary course of business, and it's probably not the best thing to do. So I want to move on here. The next thing is the payroll, okay, and the payroll taxes associated with it. So we have someone here that the payroll is about 10 grand, right? So on 10 grand, just the company's portion of it, it comes out to about $1,000 that you would have to pay to actually have 10 grand of employees. Whether it's federal taxes, whether it's state taxes, you're gonna have just over $1,000 to pay just for the employer portion. Now, the part that really gets people is the part that really gets withheld from an individual's paycheck: the federal withholding, the FICA, the Medicare, and the state withholding. That money has to be combined with the employer portion, and you have to pay those taxes either monthly or quarterly. That's not the issue I'm trying to really address here. My point is, you got a situation here where in most of these businesses, you don't start off profitable. You start off losing money. So in this case, you start off with a $12,000 loss. So if you start off with some initial capital, you'll be eroding into that initial capital every month until you basically run out of the initial capital. And then what kind of happens is, once you run out of that initial capital, what happens is you start using some of the payroll money. So the IRS looks at the payroll money in two different categories. It's what the employer was supposed to pay, which I just talked about. That's $1,000 or $1,100 a month here on $10,000. And then the next part is the trust fund. The trust fund taxes are the taxes that were withheld. The employee, you get federal withholding, state withholding, FICA, Medicare withholding. That portion is called the trust fund taxes. So you got to be very careful because the IRS, when you get behind on these trust fund taxes, they penalize you for 100% of the trust fund. Let me explain that. Just suppose you went a period of time and you did not pay these payroll taxes, and say you went 6 months and you got behind, say, $20,000 on just the withholding portion of the employee wages. You didn't pay them because you were losing money and you needed to use that money to actually fund your business, which is not a good idea. So the IRS was, just suppose you got behind, say, $20,000 after 6 months. Well, the IRS will penalize you for 100% of those taxes. So you will have a $20,000 liability. It takes some time for it to happen, but you will have a $20,000 liability because they were trusting you to actually pay these trust fund taxes. In this case, the sales taxes, that's a trust fund tax because the customer is trusting you to actually pay that over to the government. So the $1,226 is the sales tax. The FICA is $633. The Medicare is $148.15. And I think this is a typo here. The unemployment is not a trust fund. It's not a trust fund tax. So the total withholding taxes comes up about $2,500. Just excuse that little goof that we put in there. That $275 should not be there under the trust fund. So my point to you is, what happens is after time, because you're losing money, you start eating into this money that you should not be tapping into. So months go by and you don't really notice what's happening, and you start using your normal bills, rent and insurance and inventory, using the government's money. Well, what usually happens in that case is, they want you to file monthly, quarterly, and whatever, and the enforcement tactics get more escalated as time goes on. So I'm just what I'm trying to get here. The point I'm trying to make to you is there are cases where people kind of naturally follow this progression because they don't have the initial capital, or they don't have the lines of credits, or now here's the biggest one that I think that I guess you need to pay more attention to is the sales. The sales are just not there, and to really alleviate most of these tax problems or debt problems, especially with a beginning a new business, is to increase more sales. That's the bottom line. By increasing the sales, you can basically solve any other problem in the business. Now, the question is, how much time are you going to be devoted to increasing sales? That's the main thing. You can talk about, cutting costs when it comes to rent. You can talk about cutting costs when it comes to payroll. You can talk about cutting costs when it comes to any other expense. That's just short-lived, right? But he who masters the sales cycle is going to be the winner. Because look, just suppose that you are, say, $5,000 behind taxes or some debt or whatever. The cure to that is just go out there and sell more. Now, it's not going to borrow more. The key should always be, how do I sell more? And the key every day for a beginning business owner is, how do I increase the top line? The top line is the sales line. If you're not focused on that, and if you're focused on how do I cut costs, you're not going to make it. You got to be focused in on the sales cycle. For example, if I have here the guy, this person made $20,000 a month. And if he kept his operating costs pretty consistent, just suppose he jumped that up to say $40,000 a month. He would go from being negative to positive real quick. He would be in a situation where he can pay his payroll taxes. However, when I say the sales cycle, there are some things that you're going to have to square up if you actually increase the sales cycle. The next thing is collection. Yeah, you can sell a whole lot of items, but what if you can't collect? See, these are the things that a beginning business person should be aware of. Because just because you got a nice product, you might have the best product that there is. I mean, you might be the best guy who say you're the best cook in the area, right? But that doesn't necessarily mean that you're the best sales guy in the area. I've seen this time and time again. You know, you might be the best artist. You might be the best computer programmer. Yeah. You might be the best in all those things. But can you increase the revenue? Can you dominate the market? Can you go out there and increase your sales 10, 20% whenever you want to? See, it takes an art to really do that. It takes dedication. It takes hard work. It takes really being out there and pushing your product. That's the key thing. The sales cycle controls everything. The sales cycle is the god of your business, be honest with you. You know, it's not your abilities. It's not your customer service. It's, can you sell? Can you sell? I mean, I would debate anybody on this. The guy or gal who can actually increase the top line, increase the revenue, is the winner here. You know, if you look at Google, you look at all the other huge Fortune 500 companies. They're about sell, man. It's about sell. They focus less on the quality of the product, even though the quality is good. But they focus less on the quality of the product, and it's about sell. It solves all your problems in business, all of them. So the next scenario I'm going to go into is you know, this is a scenario where, you know, you've been in business for a little while. You boost your sales numbers up, and in this case, the sales numbers are kind of doubled. I kind of put these slides together from an Excel spreadsheet, and you might have a little difficulty actually looking at these Excel spreadsheets. I don't think that the right spreadsheet is up on your screen, but I have a spreadsheet where the total sales are about 39,000 here. And the cost of goods sold about 18,000. So the gross margin jumped is down a little bit to about 53%. Now in this case, you know, let me just explain to you what kind of happens here. You know, you start off with these employees, and you realize that the payroll taxes are really getting out of hand, right? So what you start doing is you say, okay, well, Johnny, you're not going to be an employee anymore. Johnny, you're going to be an independent contractor. So in this scenario, you notice that the payroll went down. I think on the last screen, the payroll was about $8,000 a month, and now it kind of got cut in half. Now, I'm not going to encourage you to just make everybody independent contractors. That's not what I'm saying here, because the law is very clear on who is an independent contractor and who is not, and maybe in future broadcasts I'll get into that. But I'm just showing you a pattern. I'm showing you the pattern where, you know, you struggle with the payroll taxes, and then you start changing the status of the employees. And next thing you know, of course your liabilities to the government go down. But it could create some adverse effects later on when, you know, you find out that they really were not independent contractors. They really should have been employees from the beginning. But I'm showing you a scenario where, you know, you go into the positive because you are doing things as far as making people independent contractors. It could be you cut your costs. It could be that you, in this case, you raise sales. That's the key thing. You raise sales. And in this case, you're starting to show a little bit of profit. After about a year, you're showing about a little bit of profit. However, after this year of just struggling, the debts have just started accumulating here. Um, and there's another thing that comes into the play, and that's the estimated taxes. So, I'm going somewhere with this. Now, the once you start making money and you got the payroll taxes all taken care of, you start making serious money. Now you got to start paying estimated taxes because the government wants their money as you go. So, yeah, you start showing some net income, and the minute you start showing net income, you got to start paying the estimated income taxes. So, the point I'm trying to make here is, unless you have a lot of capital going in, or you're the person that's determined to actually increase the sales cycle, it is going to be extremely, extremely difficult to stay afloat. It's going to be extremely difficult. I'm just painting a real picture for you. Yeah, you might start off with a bang. You might start off with a grand slam in the beginning. But let me tell you something. If you're not concentrating on those sales numbers, then what's going to happen is the net is going to keep falling down. So the key is it is very difficult for a new business to actually stay in business, pay the employment taxes, pay the estimated taxes. It is very, very difficult. And I don't want to paint a picture where these things are pretty easy to do. They're pretty manageable because, to be honest with you, to be frank with you, they are not. It's almost. I'm just being honest with you. It's almost as though these taxes added on is just one added burden that you have to anticipate, and it's not an easy thing to get over. It is not an easy thing to overcome. Trust me when I tell you this. I mean, when I started my business, I struggled in this area. I'm not saying I got behind on taxes. I didn't do that, but you had to constantly weigh: am I going to pay the taxes? If I pay the taxes, then how am I going to keep the doors open? These are legitimate questions. These are legitimate concerns, and if you were just starting a business, God bless you. It is a tough, tough endeavor. This is why I go back to what I said before. Business is not for everyone. You hear it all the time. Start your own business. It is not for everyone. If you are happy where you are, where you're working, people treat you nice, you get nice raises, you can manage your bills, consider staying there. Consider making the best out of it, right? But entrepreneurship is really for people who really got that itch. They really want to get out there and eat what they kill. They really understand that, hey, look, all the responsibilities are on me. All the employment payments are on me. Everything is on me. And you got to have a grit. You got to have a determination that, look, regardless of what happens. I don't care what happens. I have to stay focused, because if you don't stay focused, you let your foot off the gas, sales numbers go down. I was talking to a friend of mine, and I was saying that, unlike it, like most businesses, my cash flow, it was going up, down, up, down, up, down. And he asked me one question. He said, "Well, when you reach the peak, your high peaks, what happens?" And I say, "Well, we kind of coast." He said, "Okay, I can tell you why you're having the ups and downs. You're letting your foot off the acceleration once you've got some success, but you got to keep pressing. You have to keep your foot on that accelerator. I don't care if you won that big contract. I don't care. You got to keep your foot on the accelerator. And I don't care about the holidays. I don't care about what's happening when it comes to I got to come up. I got to go and have a good time. I gotta take some time off, vacation. Look, keep your foot on the accelerator, because there are going to be some days that you're going to need that extra cash. There are going to be some days that not too pretty. You got to keep your foot on the accelerator. So my point is you go through this cycle where you go from having a lot of employment taxes, struggling to pay those employment taxes, getting everything under control, and next thing you know, you're dealing with other types of taxes, income taxes. Um, these types of issues will plague a new business over and over and over, and I cannot stress enough the sales cycle here is the cure to it all. So what I'm going to do is in future broadcasts, I'm going to get more into how to really address the top line, the sales cycle. Because if you look at most of your businesses that really go under, it's because there wasn't a proper understanding that I had to continue to increase sales, and sales would keep my business open, keep your business open, and that basic understanding, you know, there are ways that you always got to be thinking, how do I grow more? How do I get more? How do I get more customers? This should be the focus. I mean, I know customer service. People say, "Hey, look, I got to concentrate on customer service." But you know what? You're not going to have customers. You got to have customers before you can give them customer service, right? So so the key is get more customers. Get more customers. Um, so, and like I said, in future broadcasts, I'll get more into the sales cycle. But I wanted to actually just give you examples of how we get behind on taxes and we feel like there's a crunch between paying our normal bills and paying the taxes. We always get faced with that decision. So I gave you two scenarios this time, the business side and the personal side. And these things are real. If you've been paying taxes, if you struggle in your business or your career, you know that these things are something that, it's something that you always struggle with. It's something that you always contend with. However, there are ways that you can overcome this. But do not think that you can use the government's money to actually fund your business or fund that nice car. I'll tell you a funny story, and I'm gonna leave with this. You know, there have people that have come into my office and they owe 50,000, 100,000, $200,000 in taxes, and they talk about how hard things are, how difficult things are. But if you walk them out, they drive the nicest cars. You go over their houses, they got the biggest homes. This is not the way we want to live, because you know the constant stress is what we want to avoid. We want to empower you. We want ownership and power. This is the name of this show. And to actually get those things, you cannot have these things plaguing you, taxes and that sort of thing. And eventually we'll get back to the subject of handling your own taxes. But this week, I just wanted to show you the pattern and why people actually fear that they cannot take care of their normal bills and pay the taxes at the same time. I'll address some of those other reasons that I enumerated in my last show, why people have not filed or why they have not paid. So until next week's broadcast, um, we will see you, and God bless, and I hope everything is going well in your life. Thank you, and we'll see you next week.